All right, so let me talk a little bit about chapter 14 and statement of cash flows. One of the things that you probably noticed there, it's a little confusing actually. It's focused on basically the cash flows, and you kind of start from a different area. You're taking your net income and starting from there and trying to backtrack and figure out how you got to that. And so what it seems like is almost backwards at times. So when you see the increase in accounts receivable, you're thinking, okay, well that's, we should add that, right? No, we're actually going to take that away because that's a negative thing. Because if we increase accounts receivable, that means we didn't collect as much cash. So we have less cash. And so those are some things that we're going to walk through. And so not paying our bills and increasing in payables is a positive thing. That means we held on to our cash. So it's kind of a little different in the way we have to think about it. And so that's why you have to kind of walk yourself through what does that really mean. So it is a positive thing that we're not being pay our bills as much. In that sense, because we have more cash. The bad news is obviously if we didn't pay our bills, eventually we'd be in trouble. But what we're looking at is how did it affect cash? So we really only take a look at the effects of cash and how it's affected. So from different things, so different transactions. And so that's how we will walk through this chapter, is we're really looking at how cash is affected. Now, companies, obviously you know the importance of cash. I've probably spoken about this a few times, but if you don't have cash, you're not going to be able to be successful as a company. You may not even be able to pay your bills at times. So that's some of the things that this is such a very important part, and why it's an important part in the financial statements part, so people can evaluate those things and how the cash is for the company. Companies that have cash are able to do lots of different things. They can expand, they're able to obviously pay their bills, and they may be also able to even acquire other companies. And so those are things that they're able to do. The companies that are strapped with cash in bad times are struggle to pay their bills, getting out more loans, and then they're paying a little bit more interest on things, and they're not able to pay, they may not be able to meet their obligations too. So those are some of the issues. So that's why this is such an important statement here. And so evaluators as investors will look at this and see how they are with cash and how they are going. So as you see in here, there's two methods, and we'll talk about both of these methods today as we walk through some of the problems. There's the direct method and the indirect method. The indirect method is used primarily by most of the companies around the country. And the reason being is it gives a little more detailed information. So as you looked at some of the problems here, you probably saw three categories, which is the operating, the investing, and the financing activities, all those activities. And so each of those activities is what we are going to be looking at. Because yeah, I can have a ton of cash in there, but how do I get my cash? Well, if I finance it all, that's not that good. And so that's what I want to take a look at. But if it all came from operations, and that means we did really well, and we sold lots of product of what we have, that's a positive thing. So that's a really, really good thing for us. And so that's why it's broken down into some different areas there. And we'll take a look at those. So questions as I kind of just give you a brief introduction about what the statement of cash flows is about and all of that good stuff. Thoughts? All right. So what I'm going to start with is, since I gave you a little bit of the introduction, we're going to start walking through some of the problems here. And hopefully we'll take a look a little bit at the chapter and an opportunity to see what it's all about. So the first problem we're going to start with here is PE 14-2 here. And that is on page 671. I'll give you a moment to read through the problem. So a good example of this one's on page 469, excuse me, 649. So as you're looking at this problem here, what we're starting with is we're just going to take a look at our operating activities on this one. So we start with our net income. And so they give us a net income of 107,500. And so that's what we'll start with. And now we're going to take a look at some different changes that have happened. And so they gave us three different things that have happened there. The first thing was we had depreciation, right? So we have accumulated depreciation equipment increased by 8750. Now since we have depreciation there, we are going to, now do you guys remember what depreciation does to our net income. You guys recall? What do we do with what's it called? It'll decrease it. It'll take with the depreciation expense. So in statement of cash flows, what we are doing is we're adding that back in to figure out what really happened with cash there. Yes, we know we can look at the cash and go, okay, this is how much cash we had. This is what we started with, so we went down. But we want to know how do we get there, and what got us there, and so that way, if we're making an evaluation of the company, like I said before, we can then directly figure out where they come from. So in here we had depreciation. So we had, which was that? 7,500. So we have depreciation here, 7,500. We're going to put that back in. So now, what else do we have? The next thing was patent amortization. So we have amortization of patent. And that was 25. 750. Okay. 2750 here. We're adding that back in too because remember we pulled that out as an expense. We are amortizing that over time and pulling that out. So we're putting that back into it here. These, what we're doing right here, are basically non-cash transactions, right? There's no cash that was exchanged for either one of these two. So right now we are pulling out the non-cash transactions. All right, so the third one was the gain, sale, of investments. So we have a gain here. Now what we're going to do for this one is we're actually going to take this away. The reason being is we've already calculated that as a part of our net income also. So we're going to actually take that away. We already added to it. Yes?
Is it saying,
Oh, loss and sale of land? Maybe I was looking at a
we're
different.
giving a loss or a gain on?
We're gonna loss.
Yeah, loss and sale of land. Let me.
That one's from B.
Yeah, that's from me. I looked at the wrong one.
You're testing us.
Yes, glad you guys pay attention. So we have loss and sale of land. Okay, and that was 4,000.
Yes.
All right. Now, since we lost that, we took that away originally, so now we're going to add that back in. Since that was a loss. So as we took away here, originally that was depreciation expense. We're going to add that back in. We had amortization of the patent. We took that away. We add that back in. We took this away, loss and sale of land. We then put it back in. And that gives us a total there. We have that total. So what we did is basically put these things back in that we took out when we did the income statements. So this is the first part of making those adjustments before we even hit into the operating activities there. So this is what you would do as the first method in the indirect method. I don't know if you saw in some of the other problems. I'm not sure. I can't remember if we do touch on it. I ran through pretty quickly when I looked at them earlier. In the direct method, it seems so simple. This is what we took out, this is what we're figuring out. It's really simple, because it is. But the indirect method, like I said, most of the companies use, it's a lot more detailed, but that is to give a lot more information. And so that's why we were working on that. So now it's why this is where we would kind of start. These are our things that were non-cash transactions that happened here. Because although we had a sale of land, we had a loss. That was non-cash. We just took it as a loss because we bought it here, sold it here. So that's a, so that was no cash transaction in these two here. So that's why we're doing that. All right. So questions on 14.3. Okay. You got questions?
No.
Okay. And it'll start kind of making sense as we walk through a few more. It's a lot different than what we're used to because we're used to this is what this means, and so why are we adding things back in when it increases and decreases. We'll talk as we get to liabilities and the assets and how that works. All right, the next one we're going to take a look at is 14-3A, which is on page 672. So I'll give you guys a moment to take a look at that and look at the changes that have occurred. As you can see, they have a 2013 and 2014, and you can see the changes that happened there. So as you can see, we had a decrease in accounts receivable. I'll just start there with it. And I'll give you guys a few moments to take a look. So they gave us the net income of 253. So what we're going to take a look at is our changes in our assets and liabilities. So that's what we're going to take a look at here. Changes in our all right. So what was the first one there? What's the change that happened? What was the change that happened to accounts receivable? Decreased. So we have a decrease in accounts receivable. I'm just going to go on here. Okay, so it's accounts receivable there. So with the decrease, what are we doing with it then? Because it went down.
Do we get to do real deductions, like just deduct it?
Well, what we're going to do is take it off the net income. So if we decreased it, what happened there? So if we had $30,000 that was owed to us, now it's down to 24. What do we do to our cash? We took away from the accounts receivable because it went. We added the cash because they paid us, because they paid us that difference there. So it says 30. So we have 39,600. We went down to 33,000. So we have a change of 6,600, and that's a positive change because we added more cash to ourselves because they paid us more. Now, if we would have increased our accounts receivable, it means we didn't collect as much as we should have. We consider this is how much money we made, but we didn't collect all of that. And so that's the difference between the years. Or do we collect more? We collected a little more this year. So that's why there's an increase in that. So we have net income here, and then we look at how we collected. And so that we have a change there, so it drops, so it means we collected more than we actually did for net income. Because we should have stayed the same, right? If everything was the same, we should stay the same with our accounts receivable, but we went down. And that means we collected a little more than we should have. So therefore, that's a positive to our cash flows. All right. The next question, and the next part says the inventory. All right. So the inventory changed. We have it's like an increase of about $3,000 and some change. Now, with an increase in inventory, how do we get that increase? Yeah, we had to buy material. So therefore, we're going to take this away. So we have an increase in that. So that means we're taking away cash because we had to pay money to get that. That's why.
So basically what you're saying, so basically it's all how it affects the cash.
Exactly.
Whatever,
Everything how it affects the cash.
Whatever it is, you just adjust it based on how it affects cash.
Exactly. How would it affect cash? So with an increase in inventory, I had to pay for it somehow. So therefore, I'm increasing my, decreasing the cash because I had to pay for that. And so here, we gain more money from that. All right, so next thing here is our accounts payable. Now we have an increase in accounts payable, it looks like. So we have an increase of 2420. Now, I added this back in. The reason I added this back in is because I didn't pay my bills. I paid less than the bills than I should have, right? Because I had this much at the start, and now I have this much at the end, so I kept cash. So that is an increase in my cash. So I just didn't pay my bills on that. So as I talked about in the opening, not paying our bills is not a great thing, but it's a good thing for cash flow. Because then we have more cash there. And there could be reasons why we have increased accounts payable, but if we have an account we have, it could be a lot of different reasons. But what we're saying to you though is we now have additional cash because we didn't pay those bills. All right. So to figure this out, what we're going to do is just figure all that out there. Net cash flows. Oops. So we don't have any dividends. That will go under the financing part there. So I think it only asks for operations. Yeah, it should be just, and so that was just a trick, yeah, on this one. We would typically do it, so the last problem, when we hit every section, so we hit the operating, the investing, and the financing activities, you will know where this should go. They're trying to trick you there. I should just bring this out. All right, so what do we have here? We have over there, like about 260 something, close to it. All right. Everybody get that okay? So all I was just doing is just figuring out how it affected cash. And that's what you remember on this chapter is, how does it affect cash? That's all I'm worried about. So even though it might be a negative thing, just like taking out a huge loan might be a negative thing, but it's a very positive effect to my cash in certain areas. But that's what you want to remember here, is how does it affect my cash, not really what happens to everything else. It's how does cash flow. All right, so questions on this one? 1403. Pretty good? All right. This is good then. This chapter's probably one of the hardest, I'd say. All right, so take a look at 14-7A on the same page there, or the opposite page, excuse me. 673. I'll give you guys a moment to read through the problem there. As you're looking at this problem, a good example is on 658. You can take a look at how that all breaks down there. Now this is using the direct method. In the direct method, it's a little different. It's a little more straightforward. It makes a little more sense. But like I said, most of the companies will use the indirect. I saw something saying about 99% publicly traded companies. Okay, the example shows us that we have kind of 4 transactions that are going to happen, or 2 transactions, excuse me. So our cost of goods sold, it gives us at $770,000. And then we have a decrease in inventory, right? So this is the direct method, so please remember that. This is a little different than the indirect, which we worked on the previous couple problems. So what we're going to do is deduct the decrease in inventory. How much was that decrease? 66,000. Okay. All right, so we have $66,000 decrease, and then what else do we have? So what we're going to do is we have a decrease in accounts payable. We're going to add that back in. The reason being, again, we need to pay our bills. Pay less of it. So we're 44,000 there. Okay, so the last thing is cash paid on merchandise there. We just figured out what that is.
Yeah,
Okay.
it's funny because I keep doing this, but when I was doing the homework, I was like, but why did we do that? I was like, I have the
So
numbers.
remember, it's out there on the recording too. I
Oh,
did put it on the website, so it's on Angel. So you guys should be able to see that along with the online class too. And so I will try to get that up even quicker to the evening and the night.
yeah, it helps me when I was
Yeah.
gone, I was like going through the homework, and I was like,
Uh-huh.
oh, I wish I was in class, and then I watched the videos, and I was like, oh, okay, that makes sense.
Is our
Well, good.
final due Sunday or is it?
Yeah, Sunday night at midnight,
Okay.
or which is midnight Monday morning. So at the end of the weekend.
Why the weekend?
Okay, then we'll make it Friday then.
Oh, so you changed the final date?
Did I not put it as that date?
Well, I had it as Friday night at 11:59.
Did I put it at that? I'll give you guys a weekend to finish it then.
Oh, phew.
And I just checked it, and it
That's on
said the
Wednesday.
homework's due on the 9th, and then
Wait, it's what are days? 9th?
Yeah.
Yeah.
yeah, it said
The
the
reason-
homework was due on the 9th, and then the final was due on the 5th.
Oh, wow.
Which is Sunday.
Yeah.
The 9th is Wednesday, so we're
Well, let's
well.
double check your
like-
file.
I'll make it all Sunday, how's that?
I don't know, yeah, that works.
How about Wednesday?
You have classes next week to start up, don't you?
We know.
Well, that's why you guys are off, huh?
I don't know, oh, are we?
Yeah, we have a week off.
That's right, I forgot you guys have a week off.
But I worked 52 hours this weekend.
Come
I
Just
can't.
kidding.
We just lost 3 managers in another store that I gotta cover.
Ugh.
All right, so questions on this one? This makes sense? Doing okay so far? Well, that's good. I'm glad it's going well. All right, let's take a look at EX 11. This will all be really easy until we get to the last problem. That'll take about a half hour to do. You know how many of my last problems are.
Is this the only chapter we're going over?
Yes.
Or we
And then we're doing
the
the
final?
review for the final
Okay.
right after this too. So I'm gonna go over about 4 or 5 problems, about 4, I think. Because one will be similar that you'll have from this chapter. And you'll have one from, basically one from every chapter or problem, and you have multiple choice. So, So I will give you guys a moment to read this problem. It's on 676 EX 14-11. Change this up here. So we're looking at this one here, as you're taking a look at this problem. We're looking at cash flows from investing activities. So we're looking at what happened. So there's a couple transactions, as you can see, that happened there. First, we sold some land, right? Or actually, maybe it's the other way around. We first buy some land. Yeah. We purchased. Okay, so we have a purchase there. But I'll start off with the cash received from the sale of land. Let's just start with that one. So we have cash received from sale of land. And how much did we receive there? There's two numbers they give us. They give us the credit of what was it? So we sold that, but we actually sold it for $54,000. Now we may have put it in there because we may have had to pay something off. There may have been something as a part of that. But what we're showing though is, or maybe it's because that's what we had written as a part of the book value of that, and that may be the reason. But what really we got in was $54,000 because that was what the cash we should have gotten for that. But that was the actual sale price. Then what we're going to do is we're going to do.
It's 54. So
54.6. Yeah. Okay. I missed that part. 600.
You're ready for we drop two.
I think so. I'll be teaching them. All right. So then what we have there is a purchase of land. So we're going to actually take out some money here, so it's going to be less cash used to purchase land. So how much was that? It was 60,000 something. I don't get that wrong. 200. Word. All right. And basically, that's what they're asking for there. Now, if we were doing some of the other parts of this, because that 34,000, whatever it was, 34,480 or 36,480, we had a gain probably on the sale. The difference between that and this, we would put that in the take that off the net income, the operating activities, because that was part of. We've already had that in there because we took that in our net income originally, so that's where we would take that out. So that difference there of the 36,480 and the 54,600 would be a gain to sell that land. That's what we gained on that, and so that would go up to the other portion. But we're not working on that in this problem here. It only required us to do the investing, and so this is what happened here. So if we were to figure that out, we would have a loss here of
23,720.
just be the difference between these numbers here. Yeah, so it'd be 5,000. No, 6. No. Yeah, that's right. You're right. Yeah.
Yeah, I was doing the wrong numbers.
So we have 5,600 is what we would have there. In that we'd have a decrease in our cash from investing activities. So we probably hopefully made it up here in operating, or if we made it up in financing. And if we financed it, we made it up. That means we either put out stock or we did other things like a loan or something like that, or a bond or most favorable something. In that case. All right, so questions? So the first 4 questions here have been pretty quick and pretty easy. All right, so now we're going to get to the tough one. So now we're going to put it all together. We did not talk about financing activities just yet. That's what we'll talk about the last one here. So we've talked about operating activities, and this was investing, and then the last thing, last one we'll put them all together and have the operating, investing, and then the financing activities. We're going to put that all together here. So let's take a look at the next problem we're going to work on, which is PR 14-1A. I'll give you a moment to kind of read through that problem. There's a bit to it. Yeah, there's a bit to it. This one will take us a little while. You guys mind if I put it on the spreadsheet up there? I was just thinking it might be a little easier for you guys too if I do that. So I'll put it on the spreadsheet real quick for you guys. That's what we're working through here. And then I'll save it for the Angel for everybody to take a look at it. I'll kind of walk through it with you guys. All right. I'm going to dim the lights a little. So everybody can see what the camera can see it. What mood lighting? What's that?
Yeah. Yeah, I was sitting all by myself. I think he's making fun.
Why are you way over there?
I needed to plug my computer in.
All right.
But I don't know how to connect it to the wireless.
It's your same password and stuff that you use to log in.
If you're like, oh, to Angel. I tried that. It's not good. Did you just go to the normal one? Not the
Okay, so
zero
what
one?
we're going to do on this problem here.
Click on the NN wireless. It'll ask you for your,
Yeah.
you put the information, you put your username in, and it'll ask you for the password. It's whenever you log in to the portal, I'm sorry, like the NN portal.
Yeah, so to log on to the network here.
Yeah. So if you're looking for an example of this one, how we're going to walk through this, a good page is 655. If you look at the bottom half of that page, you'll see a statement of cash flows in the indirect method on 655, and it'll kind of give you an outline of where we're heading and what we're going to be doing in this one. And it will be that detailed when we go through this. That's one reason why I want to have it up here, because I don't think I can't get it all on the one board. So just be me erasing a lot of stuff.
You say 655?
655, yes. So as it's preparing the statement of cash flows, looking below there, you'll see basically what we're going to be doing, walking through all these things. So the first part, before we even get into everything, what we're going to do is just take a look at the operating activities. Remember, we start with the operating activities. What happened in our operations? So first thing we got to do is figure out what our net income is. So what's our net income there? I think it's told us it's an E there. Yeah, that's it. That's it. So 190,280. That's what we're starting with our net income there. What we're going to do next is, as like on the page there, this is our adjustments. I'll put basically what you see on that page. The first thing we're going to take a look at then, as you can see in the sample there, it says depreciation, right, on 655. So we're going to take a look at our depreciation there. That was one of the first things that we looked at in that first problem we looked at this evening. We looked at the depreciation and what was changed. So let's take a look at that depreciation and see what happens there. I would probably, as you're working through the homework, refer back to this example here on the page, because that will really help you out and walk you through, because it's not easy to try to figure out where what everything goes. But kind of as you're looking at each of the parts, where do you think they would fit in? Is it operating? Is it financing? Is it investing? So the first one we're going to talk about is depreciation there. So as you can see, if we look at depreciation on the problem on 682, we had a change there. We went from 111,000 to 124,800. So we have that change, that depreciation there. So how much was that change? Wait, do the math. 13.8. Okay. So that's what we're starting with then. So as you can see, the next part we're going to go to on that example that shows us on that other page, it says, do we have a gain on sale of land? Or anything that happened with our land? A gain on sale of investment, anything like that? Let's see here.
There's an increase of $246,000.
Increase to 246 on our land. So we purchased land. That'll be going under the investing part there. So we didn't have a gain on sale or anything like that. Let's see here. Do we have any investments? We're sold for $210,000. So as you can see, on A, if you look at the problem there on A, what it says to us there is that we sold for cash $210,000. So we got cash in $210,000. But what was that worth? It was worth, if it shows, there we went down to zero from 180 down to zero. So it was worth 180. So what was our gain then? So we have 210 to 180 is the difference there. Yeah, so we have a $30,000 gain. So what we will do as a part of that is we will take that back out. Remember what we do on the gains. All right, so now we're taking 30,000 away for that. So we get pretty good there. And again, that land, we purchased that now being investing because there was no gain or loss or gain on that until we sell that off.
Where are you getting these numbers from?
What's that?
I don't see those in the problem.
So on A, on that problem, PR1A, you see where it says A there? It says we sold it for cash $210,000. So if we look up into the investment part of there, you see the change there went from 180 to 0. So we sold all of that 180.
Okay.
And the gain was the 210 to the 180. That's where I have that change there.
And the depreciation number is just the difference between the 462 and the 481.
Exactly. Or 40 is 462.
Actually, it wasn't actually a decrease, it was an increase.
No, it was 111 to 124.
Right under.
800. You see that there? Yeah, so where it says accumulated depreciation equipment,
Oh, okay.
111 to 124.8.
No problem.
All right, so that's kind of the changes that we had to make the adjustments there. So now what we're going to do is do the changes in our current operating assets and liabilities. Let me put that in there real quick. So let's take a look at that. We're just going to go down the list there. So we'll start, obviously we're not going to start with cash because we'll figure that out. That's what we're looking to figure out. So we'll start with accounts receivable. What was the change there? So you can see that there's an increase, right? So with an increase in accounts receivable, what will we do? Yeah, we're gonna subtract that out there. So let me figure out what that's gonna be here. So yeah. Equals 5, 6, 7, 2, 0 is. So you should have come up with 14,160.
That's just subtracting the 2 years difference?
Yeah.
Okay.
Yeah, that's just trying, and that's what we're primarily gonna do. And a lot of this here is figuring out, oh, what's changed? What's changed between the 2 years? And so that's the next one we're gonna do is, so we did accounts receivable. And then the next one, as you can see from that is inventories. Now we have a change in the 2 years in the inventories. Was there anything else listed on the inventories there? It doesn't look like they had anything down below, any other adjustments or anything like that, so. We have an increase in inventories. So with that, I have 462. Everybody see how I came up with that? So again, we had an increase in our inventories, therefore we had to pay for it somehow, therefore we pay upon, so we have to account for that in there. So we're just decreasing from away from our net income there. All right, so we've taken away quite a bit already. All right, so the next thing we're going to take a look at, remember these are current liabilities and current assets we're taking a look at here. So if we go to investments, that's not current. Land, that's not current either. Those are more at the investing types. Equipment, well, that's not current. So let's go down to our liabilities here. So liabilities, we have accounts payable. So we have a change in our accounts payable. We have an increase in our accounts payable. So with that increase, this time we are going to add it. I'm adding that back in, that increase. Because again, we increased that, so we didn't pay as much of our bills. Are we good so far? All right. If you look at the example there, it says, let's see, increase in accrued expenses payable. Do we have any of those? Yes, we do. All right. So that increase, what was it? Was it a decrease? Sorry. Since we have a decrease there, that means we're going to decrease it here because it's a liability, so there's a decrease. So how much do we lose the difference there? Do you have that? So 800. All right. So what we're looking at here is our net cash flows, no operating activities. Put it out way out here. And find this guy. So, how we doing? Making sense what we're doing here? So basically we started with our net income because that affected our cash, obviously we're bringing that money there. And then take out the adjustments that we have as a part of that. So this is our net cash flows from our operating activities. It wasn't quite as high as our net income, as you can see there.
Where did you get the net income
The net income, that was given to us at the, on E, letter E.
from? Oh.
Where it says retained earnings there, we're gonna put that net income, that's what
Okay.
it is.
Okay.
All right, so any other questions to the operating activities? You good if I move on? This is probably the more difficult part right here, is this part, trying to figure out this. The investments is not too bad, the financing usually isn't too bad either. But our operating activities, those usually be the tougher one. All right, so the next thing we'll have, if you look on that 655 there, is cash flows from investing activities. Cash. Now it says on the example there, it says cash received from sale of land. Well, we didn't sell any land, but we did sell some investments, right? So we got money in as a part of that. Okay. So what we did get in here was we sold it for $210,000, right? That's what we're gonna put in here, because that's the money we got in for it. Yes, we took a gain on that, we backed that gain out, remember? So we backed that gain out of there, but, because that's adjusted our net income. But we did receive all $210,000 for the investment there, on that sale. All right, did we purchase anything? I think you mentioned it, a little bit ago, what did we purchase?
Oh, land.
Yeah, the land. So that's what we'll probably have next. So it's for cash paid for land. How much did we pay there?
246.
246. So 246 oops. We're gonna take that away. All right. Questions how we got that? That's that change there, that purchase. So you saw from 0 jumping all the way to 246.
So if
For the
there was,
assets.
if there was a land amount in 2013, you would have to.
Do the difference there,
Make the
yeah.
difference.
Yeah, because that would be the increase in that investment there, because then we must have purchased something as a part of that. They kind of made it easy by saying 0. Made it a little easier for us, because we didn't have anything, all of a sudden we have something, so there's a change in our investment there. Remember, we can't appreciate land, so there's no appreciation in that. All right, so next thing is, do we have any other changes? I'll give you guys a moment to take a look at that.
The big equipment?
Yeah, there's some equipment changes, right? How much do we have there? So equipment, as you can see, went from 414, 840, 14,000. So 114,000. All right, I'm just gonna total these two up right here, just to kind of, so I know how much that is. So it's 360, so we had 360 in when we paid out, and we gained 210. We brought in. So obviously you can see there's a difference. And so that is where the change is. Our net cash flow is used for operating activities. Or so that will be this, 150,000. Lot simpler, investing. I'll have it up.
I know, I just-
Does that? You have a question?
Oh, so, okay, the difference then.
So these two is just add together to get this.
Okay, and then, oh,
Yeah, you just whatever the difference is between those two, yeah. And remember, these are, when you look at this here, this is not debits and credits. This is just organized in a spreadsheet.
I like this so much better.
So,
This
it's
makes
just
sense.
organized there. So the other stuff is backwards, that's it.
I know, but this is logical. This is how much money you have.
Well, there you go. That's the
Versus-
important thing.
I'm like, yeah, but how much money do I have?
Negative 150,000.
Oh, gosh. I can't afford myself.
You're expensive.
I know. I noticed that when I went shopping. I was like, oh,
All right.
gotta have good taste.
So if you look at the example there on 655, you'll see that there's several ways of getting cash in finance activities. Remember I said common stock, you could either put common stock out there, so allow people to purchase it, so how much whatever, how much you bring in from that, or you could purchase stock. You remember that from our one of the previous chapters when we talked about treasury stock, when we sometimes go out there and purchase stock back in, and we might do that. So there's a positive and negative in that in the equity area there. Then you also could have bonds, and putting out bonds or buying back those bonds. Those are the changes there in the financing activities. And then you also have dividends as a part of that too, because if we pay out dividends, that's money that's going out in our cash flows. So that's what we'll take a look at in this area here. So if you look at on 655, it starts with basically cash received from sale of common stock. And that's where we'll probably start here, because I think we had some, didn't we? So how much do we have there? Now, what I want you to take a look at is you're looking at this one here. I'll start typing here, and then we'll put it up. There's two things to look at. The two things that you're looking at here is we've got a par change. How much is the par change there? Because there we have a change to our par value, right? It started at 75, I believe, went to 95. So there's a $20,000 change there. But there's also another change. If you look at the line below that, there's a change to our paid in excess of par. And that's the addition we have to add to the par value too. So how much did that change? I think it went from 210 to 290.
Yes, it'd be 80,000.
So that's 80,000 plus the 20,000. That gives us $100,000 in cash that we receive from additional common stock put out there. So you have to make sure you get both of those items in there. Now that's a positive number because obviously we're getting cash in for that. We gave out part of our company, and so that's a positive number. We're adding that to it. So that was 80,000 from the excess of par and the 20,000 and the change in that par value from the 75 to the 95. All right. Looking back, if you want to go back to that page again on 655, you'll see that we have less paid for retired bonds payable. I don't think we have any of that. Nothing is said in that area. So we'll just skip that part. The next thing is less cash paid for dividends.
Is it less?
Is that?
It's less?
Yes. It's less because we're paying this out. Because we were taking away from from us, because we had to pay these dividends to our stockholders.
It's 3,600.
So we had, let's see, 36.
So, rather than like that.
Well, there's also F says something about 72,000 debit retained earnings free cash dividends.
Yeah, so we have the 7,200 there, and then, so there's a 3,600 there.
Yeah, I believe so.
Would it be 90,000 less than 14,400? Get 72,000.
So you have the 72,000
That's
there.
been put away for dividends, and then you're also.
So this is debited to our retained earnings for cash dividends declared, so we have 72,000 there. And then where'd you get the 3,600?
I just took the dividends payable, took the difference.
Yeah, so we need to take the dividends payable there, so as a part of that. So you have the dividends payable. So as you can see there, dividends payable, that's a credit, right? So we had an increase in that, so that means we owe more, right? So because of that, we owe a little more. What we'll do is change the change into here. So we'll take the 72,000 minus 3,600. And that will give us what we took out for dividends. Does that make sense? Yeah, because we didn't pay, we kept a little bit more, we didn't pay it yet, all of that.
So you deducting the 18,
Was that-
the 18,000 then from the 72, or is it the 18,000 plus the 72 less the 14,400?
So where'd you go with the 18,000?
The difference between 18,000 and 14,400.
Oh, yeah, the 18,000 and the 14,400. You're taking the difference there between the two of those.
I get that, but
So
it's
yeah.
saying that they also held back another 72,000.
Yes, so we're
you
taking the
take
seven-
that number and add it to the 3,600, wouldn't you?
No, because we didn't
Because
pay
you're
that
paying
out.
div-
We didn't pay it out yet. See, so what happened is we went from here, 14,400, right, to here, 18,000. So what we have here is we held on to more of it. So we held on to more of it, which was 3,600. So $3,600. We didn't pay it. We kept it. So that's why we declared this amount, 72,000, but 36 of it we have not paid yet. So we have not taken the cash away yet.
But wouldn't it be in addition to?
Is that?
Wouldn't that be an additional?
No, because they just have not paid it yet. We declared it, we just haven't paid this portion there because it went from 14,400, this is what we were supposed to owe, if everything stayed the same through the year, to now we owe this much more, but then we have this here. So it's not an addition, it's just a change. We've taken some of this money and put it into here. We just didn't pay all of it, for whatever reason, we didn't pay all of it.
Okay, I get that, but, okay, if a company made, or was saying, we have an additional $72,000 we made extra for dividends this year.
Mhm.
Okay, and you paid 14,400 the year before, and then you're able to do 18,000 the following year.
Well, 14,400 is what it was at the end of the year, that was our balance, we had not paid out.
Right.
And so
So
it
if-
slid up another to 18,000.
So you paid the 14,400, you still have 3,600 that you get back in cash.
What's
That
that?
still needs to be paid out.
It still needs to pay out.
So if you're paying it out, wouldn't it be the payout of 3,600 on top of the 72,000 that you're declaring on top?
No, it's just, because this is what we declared.
Because that's-
This is what we declare, this is what we will pay over the time of that. The problem is we didn't pay some of that. Because whatever reason, maybe we didn't pay that until we were paid 2 days into this year, whatever it may be. And so that's the reason, so it just slid into this part, and so it went up a little higher.
Okay.
It's tough to kind of understand what you're saying, but we just brought this up. We still owe 18,000. We still owe from last year. We hadn't paid it. The difference there, there's just differences that we've got a little more. Because we probably paid this all the way down to zero at some point in the year, and then now we had 14,400 plus this much more that we didn't pay yet.
On top of the 72.
Was that, no, because it's still, that's what we're supposed to pay out. That's what we declared in dividends, so that's what we're gonna pay out. So So maybe the previous year, what happened here was, we said we were gonna do 80,000 in dividends, but we didn't pay that much out.
Okay, so that's, for
So
me,
that means we would have paid 65,600 is what we would pay.
okay, so I'm still going back to chapter 11 when it was talking about dividend payouts, and then if you didn't pay it all out one year, it got added into the.
Yeah, no,
following year.
you're right, yeah, I
You know what I'm
gotcha.
saying? So that's
Yeah.
where my logic's coming
Yeah.
from, is I'm like, well, if we didn't pay out the full amount, we still have this amount due.
We
It'd be
still have
that
that due.
Plus whatever's.
We still owe this money, we owe this $18,000. But what's additional to that is the change, we're looking at just the adjustment from that. And so what brought this up? Well, we didn't pay additional stuff. We didn't pay some of this stuff here, that's why. So what brought this guy up? So that's what we're looking at.
Fair enough.
All right, so because of that, we ended up with, should be 68,400.
Okay.
So now we just figure out what our net cash flows from finance activities. All right. Do we have an increase in cash?
We need to go down.
I think you slid up a little ways.
Nice.
Yeah.
Oh, I did. Let me see your cut, let's see it. Nice, thank you for catching that. That's over here. Gonna help me out. I think there's only one way to get here. All right, so what we have is, we have some changes here. As you can see here, we had a increase from our operating activity, a decrease in our investing activity, 150, and then an increase here. So we have an increase in cash. So what I'm going to do is figure out what that increase is. So I'm just going to sum it all up. That's 29,000. 880 there. So that's our increase in cash. So what was our cash at the beginning of the year?
Would it just be the retained earnings?
No, just our cash, actually, it's just in our cash.
Oh,
I think it says 439, 440. Something like that.
So the increase in cash is just the 390.
Yep.
It's just those three.
The three
values.
for each of those sections, yeah. So what we're looking at is the sections there. And I'm going to kind of walk through this again as we finish up here. Now, one way you can check yourself too is to go back and check in, see if your numbers match. Because your numbers should match what we have in your cash. So if we look at our book, in that top row it says cash is, for 2013, it's this number, 2014, it's this number. And so if I add this number to this number, it should equal that number. Because that's our increase in cash. And so yes, I can already figure out what happened to my cash. I can look in there and go, well, cash went up by 29,880. I can look at that and find that out. But how did it go up? And that's what we're doing here by the statement of cash flow. Why did it go up? And what sections did it go up in? And what's happening here? And that's why we're doing all this. Because it's very easy to go to look cash, let's start here, and here, it's up or down. It's pretty simple. We can figure that out. But how did it do that? And so that's what this whole process is about, is going in there and trying to figure out what those changes were made. And so we went through each of these sections here, from the operating, what happened with our operations, everything that's a part of that, to our investing activities. Whoops. So any land sales or equipment sales, that type of stuff. And then into our investing activities here. Or excuse me, our financing activities here, where we sold the stock and different things like that. And so that gives us the totals for each of those. All right. I know that was a lot of that problem. So do you guys have a question on that? Can I help you work through any issues that you have on that? Any problems?
Actually, solved a lot.
Did it?
For me.
Good, good. All right, well, let's take a break, and we'll come back and we'll do some review problems for the final exam. And then we'll get you guys out of here.